Tilray Brands just reported that its net loss shrank by $2.08 billion in 1 year, 95% smaller. That number is real, and it is straight off the income statement. But almost none of it came from selling more product. The 10K says exactly where it came from. Start with the part that did improve. Net revenue rose from $821.3 million to $915.5 million, up 11.5%, so $94.1 million of new revenue. Hold that number. The loss improved by more than 20 times as much. Here is the first tell. Revenue grew 11.5%, but gross profit grew only 8.3%. Gross margin went down from 29.29% to 28.45%, 84 basis points thinner. Companies in the middle of an operating turnaround do not usually give back margin while they grow. Now the bridge. The operating loss went from $2.28 billion to $63 million, an improvement of $2.22 billion. In fiscal 2025, Tilray booked one line called Impairment of Intangible Assets and Goodwill, worth $2,096.1 million. In fiscal 2026, that line reads zero. That single non-recurrence is 94.4% of the entire improvement. The notes decompose it exactly. Goodwill took $1,248.2 million, and $1.07 billion of that was cannabis goodwill alone. Intangible assets took the other $847.9 million, brands, licenses, and customer relationships. Beverage, wellness, and distribution goodwill all went to zero. No cash moved. Nothing was sold or closed. Take the impairment out, and the operating loss still improved by $123.5 million. Look at which lines moved. The largest saving is $69 million of amortization, down 78%. That is not cost discipline. Amortization collapsed because the intangibles generating it had just been written to nothing. The write-down is still doing the work a year later. Meanwhile, the one line that reflects what it actually costs to run this company went the other way. General and administrative expense rose $36.3 million, up 21.7%, to $203.6 million. Inside it, stock-based compensation nearly doubled to $45.9 million. So where did the $94 million of growth come from? Distribution. Buying and reselling pharmaceutical products, mostly in Europe. It grew 20.7% and supplied 56 million of the 94. It also carries a 12.4% gross margin, the thinnest thing Tilray does. 3 of the 4 segments improved their own margin, and the consolidated margin still fell. That is mix, not pricing. Cash tells the plainest version. Operating activities used $69.1 million, and capital spending took another $33 million. Financing provided $131 million, and the mechanism is the at-the-market equity program. 19.6 million new shares for $161.6 million gross. Even after that raise, cash and marketable securities fell. Weighted average shares rose 25.6%. And here's the disclosure worth the whole filing. $752.4 million of goodwill survived. And after the other 3 units went to zero, all of it is cannabis. Last year, the company held that balance with a discounted cash flow, assuming 34% average revenue growth over 5 years, and a 65% probability that Europe legalizes. This year, it did not rerun that model. It ran a qualitative assessment and recorded nothing. Cannabis revenue grew 7.8%. So what is it worth as a normal business? At $4.38 a share around the filing date, per Yahoo Finance, against the 131.7 million shares the 10K reports, that is about $577 million of equity value. Add the debt, Subtract the cash, and enterprise value lands near $0.57 billion, roughly 9.3 times the company's own adjusted EBITDA. That sits inside a base case, with a bear near $0.27 billion and a bull above $1 billion if legalization lands. Implied value under stated assumptions, not a price target. One last thing. Nobody wrote this by hand. Every number came out of Tilray's own XBRL, including the sensitivity line, saying a 1% higher discount rate would have added $133.8 million of impairment. The same pipeline reads any of the 10,000 companies that file with the SEC, and a private company reporting in the same format is the same job. This entire analysis was built on the RoboSystems SEC shared repository. Structured filing data for every public company that files. Revenue, earnings, balance sheet, cash flow, segment breakdowns, all queryable, all from the original XBRL. If you want to run your own deep dives like this one, the link is in the description.